Hey guys, welcome back to the channel. Something's happening right now in America. Gas prices are rising again. Housing is freezing and car companies are pulling back. But here's the weird part. The stock market is going up. So what's really going on? Because this might be one of the most important moments for your money in 2026. Stay tuned. Let's start with the biggest driver of everything right now, energy. Oil prices have surged more than 30% in just weeks, driven by rising tensions in the Middle East. And when oil goes up, everything follows. Shipping gets more expensive, food costs rises, airlines raise prices, and construction costs increase as well. This is why inflation is starting to heat back up again in early 2026. Even businesses are feeling it. Small business confidence just dropped to its lowest level in nearly a year. That's a warning sign, because when businesses get nervous, they stop hiring and they stop investing. Now, here's where things get confusing. Despite all the bad news, the stock market itself is rising. Why is that? Because markets don't care about today. They care about what happens next. Investors are betting that this oil spike might be temporary. And if it is, companies could still perform well throughout the rest of the year. Bank earnings are also giving mixed signals. Some banks are making huge profits from volatility and trading, while others are struggling because higher interest rates are squeezing their core business. So what does this mean for the investor? This is no longer an everything goes up market. This is what I call a selective market. Companies with strong cash flow, pricing power, and low debt are winning. Everything else starting to fall behind. It is now survival of the fittest. Now let's talk about real estate, because this is where things get real. Home sales just dropped again, but prices are still near records highs. And mortgage rates, they are unfortunately back up around 6.4%. That combination is crushing buyers. Think about it. High rates, higher monthly payments, high prices, larger down payments. With fewer listings, more competition. So what happens? The market freezes. Sellers don't want to give up their low interest rates. Buyers can't afford the new ones. And transactions slow down. This isn't a crash, it's a lockup. Now let's talk about the car market, as this is telling the same story, but in a different way. Cars are still expensive. Interest rates on auto loans are high. And now something new is happening. Electrical vehicle demand is slowing down in the United States. One major automaker just announced it will stop producing top EV models in America. Why? Because incentives have disappeared and buyers are pulling back. Even with higher gas prices, people still care more about affordability than technology. So right now, the auto market is stuck between two worlds. Gas cars are expensive, EVs are uncertain, and consumers are waiting. So when you connect everything together, here's the real story. America is dealing with rising energy-driven inflation, slowing business confidence, a frozen housing market, and an uncertain auto industry. But at the same time, markets are still trying to move higher. That's why the moment feels so strange, because the economy isn't clearly strong, but it's not collapsing either. It's what I call in a transition. And moments like this are where the biggest opportunities and the biggest mistakes happen. Because when signals are mixed, most people get emotional. But smart investors, they pay attention. And that is why you are here watching this channel. Because you are a smart investor and you want the facts. If you want real breakdown like this every week, subscribe to this channel. Because understanding what's happening is how you stay ahead. Thank you and have a prosperous day.